I guess the key question here is what's permitted within the scope of the SVF licensed activities. And one of the challenges I've been putting to my clients and my teams is what can't you do? So if you look at traditional banking services and those activities that authorised institutions can currently provide in the market, a huge range of those types of services can now be provided within the scope of the stored value licensing regime. And given that it's a much easier license requirement, the barriers to entry, the levels of capital requirements, it's a much easier license for companies to get. It represents a huge opportunity for a new range of businesses to start participating in the financial services sector and offering services to the market. So what we're seeing is new players rather than traditional banks, particularly using this area. They can be technology companies. A lot of them are, in fact, what they consider to be pure tech companies, platforms that are offering facilitation of loans or facilitation of payments from one party to another, anything that involves the movement of money. Which is something that's increasingly moving away from traditional banks. These organisations are now able to do this under the guise of the SVF licence. I think one of the surprises that we've seen in the market as a result of this is that not so much that it's an extra layer of regulation that is making it difficult for organisations to offer this, but it's being turned around and businesses are now seeing this as an opportunity to participate at a relatively low entry point in this very lucrative market. I think what we have is a very unfair playing field now, stacked against the traditional businesses. So some of our clients who are participating now in these payment services, if I look at their fixed infrastructure costs, they have small teams of people in relatively low-cost locations around the city or indeed in other cities around the world, able to offering services that are directly competing with the things that I used to go in and get a bank to do for me. What that means is that these organisations can offer these services with much lower commission rates or at much lower fixed price of accessing these services. So organisations in the traditional banking sector that still have all these fixed overheads, large central offices, huge staff costs to deal with, lots of other, they've been basically set up in this way. And they're now finding that they're competing against organisations that can run on effectively a shoestring in comparison. So it's quite hard, I think, for the traditional banks to compete with these new technology providers and new service providers in a way. And I think we will see a lot of movement of these types of business lines away from those banks. Why would you pay 2, 3, 4% commission to a bank if you can pay 0.1, 0.2, 0.3% commission to a financial services player that offers an online platform and you never have to go and stand in a branch? Well, I think that's the beauty of the SVF regime, is that the smaller, medium-sized companies can actually participate in this market without the same level of overheads that traditional bricks and mortar institutions have to do. I think the other thing that it provides is the ability for even non-existent, if I can use the phrase, businesses. So businesses that don't even necessarily have a physical presence in Hong Kong. They're operating payment services solutions on a global basis, somewhat irrespective of geographic boundaries and local national laws. And we're talking to a number of those businesses who are saying, well, can't I just operate this off my IT platform and my website that I might host in another part of the world? I have some people maybe in another part of the world, but why can't I offer this service now in Hong Kong? So it's not even just small, medium operators, it's actually operators that have never even had the ability to access this market, suddenly starting to come and talk to us about, can I have one of these in the local market, and not even have to set up a presence. Now, there are some nuances around that when you get into the details of the application process, and there is a requirement for local presence, but that local presence requirement is actually quite minimal when you get into the details. It's a very good question. There has obviously been a raft, I think 16 licenses granted late last year. We're expecting another tranche of licenses to be issued. We're also participating in a number of further licenses for clients that we're aware of. The interesting dialogue we're having with the Hong Kong Monetary Authority is all around the sheer volume of applications that they're receiving. So I think what we've seen in terms of licenses granted to date is really just the tip of the iceberg in terms of participants that want to get involved and get a license in this market. We've even seen some resistance from the MA to even accept new license applications, I think on the back of just being flooded with interest. So what does that mean for the market? I don't think we yet know. I think what we are going to see is a lot of licenses that are granted and applied for. I think it's a huge industry that represents a lot of opportunity for different players. But inevitably, I think we're expecting a degree of consolidation to occur. So we're already talking with our corporate colleagues about how do we prepare ourselves for the inevitable consolidation of these businesses to make efficiencies as these new technology players actually need to start competing with each other rather than the traditional bricks and mortar banks. So I think we are going to see at some point in time a consolidation, but that's not where we're at yet in terms of what we're seeing. We're just seeing something of a gold rush towards acquiring licenses.